Welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in today. Why don't we take a look and see what these markets are doing for us? And we're going to start with corn. All right, how about that? We lost that 481 line earlier in the day in D's. We're still a little bit lower, 6 cents lower actually in D's. 476 and a half is last, a penny and a half off the lows. And we've gone through this already. We've got a 10.5 cent range. So if you're a penny and a half cent off the lows, 10.5 cent range, and 6 cents lower than the day, it's not very good, is it? So although the range isn't really big, we're still bumping against those lows. And again, D's corn, we gave up that 480, 481 line, and it looks to be like the market's trying to tell us something. All right, let's take a look at soybeans. Well, soybeans, they're also lower. In November, the new crop, 18.25 cents lower to 13.43 and a half. 3.5 cents off the lows of a 33-cent range. There you go. That's also going to be weak. 18 cents lower. The no beans, 13.43 3/4 is last there. How about the wheat in Chicago? Chicago wheat's down 2 3/4 cents in D's. 6.22 3/4 is last. A penny and a half off the lows there. And we've also got a 16-cent range. So a penny and a half cent off the lows of a 16-cent range is going to really paint that picture. Moving on from Chicago wheat to Kansas City, let's take a look at the hard red. We keep losing a penny every time we go back to take a look at it. 3.25 cents lower now in the D, 7.45 even as last, but still 2.5 cents off the lows. And we do again have about 14-cent range over there. So again, 2.5 cents off the lows of a 14-cent range. Doesn't really give you the sign of strength, does it? Let's move on to Minneapolis and take a look at the spring wheat. That's 8 cents lower in that D's contract. 7.91 is last. That's a penny off the lows of 7.90. And again, we've had a 14.5 cent range there. So a penny and a half off of a 14.5 cent range, or close to the low of a 14.5 cent range is not good. How about we take a look at cotton? We'll get to our guest analyst. That's higher though. Here we go. We'll celebrate something here. 89 points higher in the D's cotton. 84.60 is last there. Let's bring in Tommy Grisafi. He's with Advanced Trading. Tommy, you just heard me rattle off some kind of depressing numbers. Is the market trying to tell us something?
Well, there's a couple things going on in the outside markets. I know you like to follow that. I just gave a speech here in Iowa. I'm in Bettendorf today, and I was speaking for Liquid Grow, and I told the farmers that there's some real headwinds coming in. It's not just the low prices, but pretty much front month corn has a 470, 480, but all the months, these 25, 26, these 24, 25, 26 are all around 5 or 495. But this 10-year note, and I know that's one of your favorite things you watch, talk about it on Scott the Cow Guy all the time. 10-year notes hit new highs here, highest level since 07, 08, and it's a real headwind because many were preaching that interest rates would calm down. It's never been more expensive to produce a crop. It's never been more expensive to raise cattle and hogs. Everything's costing so much, and we're watching world markets pull back. One other thing I noticed this morning I didn't like, the stock market was up pretty good, and then it made new lows. When I look at my screen, there's a lot of red on the screen, and people are getting paid less to produce stuff, but it's costing so much to do it. The farmers in the room, they're pretty... if you talk about prices being lower, they'll remind you how much land prices are up. I don't know how long the two can stay that way. I don't know how long we could have record land prices, 9, 10, 11% operating in lower commodity prices. But for right now, the American farmer still has a good attitude. And of course, the Pro Farmer Crop Tour is going on. They'll be swinging through Illinois tonight and other parts out in the West. They'll be getting through Iowa tomorrow. Scott, I've been really preachy, or I hate to say the word preachy, but I've been very specific on the sense that I knew there was enough good bushels out there that we didn't have to explode anymore in price. There may be a few more good bushels, but I have to tell you, with this heat, we may be taking bushels off our record yield or a good yield, and we won't know those final numbers for months to come. Back to you, my friend.
Yeah, we just had a viewer text in. Interesting point where he says that while the Pro Farmer Tour usually has lower yields than the USDA, during the week of the tour, on average, you can see a 20 to 25 cent sell-off in beans and a dime lower in corn. And it looks like we're trying to hold true to that relationship. So who knows? But we're definitely trading on our heels right now. All right, let's take a quick break. We're going to come back and we're going to talk more with Tommy Grisafi in Bettendorf, Iowa. We're going to talk about cattle and hogs next. All right, welcome back. Let's talk about, let's do live cattle, right? We're in the cow jacket, and we'll dive right into live cattle. I've got it pulled up here with the technology that we've got here at RFT. It's fantastic. Let's take a look at October. $1.17 lower, October live cattle in Chicago. Now it's $1.15 lower. 178.72 is last there. And that's about 50 cents off of the lows. We've had a decent range over there, almost $2. So again, $1.15 lower, 178.72. That's Oct live cattle. If we move over to see what the feeders have got in store for us, well, we've got a lower corn board. This one's having a hard time getting out of bed, right? Let's go to the October. That's down 85 cents to 251.80. I guess it's $1 off the lows. We're kind of in the middle of the day's range, maybe towards the lower end of it, but still, there's not a lot to get alarmed at there. Again, 85 cents lower in that Oct to 251.80. Lean hogs, what do we have going on there? We can't get a rally out of them either. We'll start with the D's. I'll go to the October. October's down $1.20 to 79.42. That's about 25 cents off the lows there. Deese is down $1.50 to 72.22. And that's about 27 cents off the lows there. All right, let's bring back in our guest analyst who's been so patiently waiting in the wings out in Bettendorf, Iowa. Tommy Grisafi with Advanced Trading, friend of the show, friend of the Cow Guy Close. Thank you very much. All right. What do you think about the meats? Oh, the floor is yours.
The overall tone of all the markets, again, it's August, last few weeks of August, so many people in the world on vacation. People's appetite for risk is lessening. You have to respect these higher interest rates. Do you want to invest in commodities, or do you just want to put your money in the bank and make 5, 5.5%, 6%? Flip it the other way, though. The people actually raising cattle from start to finish, hogs start to finish, the amount of dollars it takes to keep these operations running and the amount of capital and the cost of capital have never been so high. So when you see that margins aren't good or we're in the red, it's a very scary time. Looking forward at cattle, if you were to buy a load of cattle today in auction and try to feed them out, the numbers don't look good. Either the board's going to have to rally or something would really have to change with the mathematics of how that works. So tougher times ahead for the meat industry, even on that lower corn board. You'd think, hey, 470 corn, 450 cash corn harvest, it's going to be great for meats. It's funny how sometimes markets adjust to higher prices and all do well. Like we could have higher oil, higher corn, higher meats, and everyone can make money. We're coming into everything selling off, except for that oil, though. Crude oil is still high, and you know why that is, Scotty. It's the one commodity still holding its own.
Yeah, we'll have to wait and see, but you're right, and it's going to be interesting to see how this all shakes out. Tommy, I agree with you. I just see this market really just is sitting here trying to tell us something here. It's not that often that you see everything kind of roll over like that. And I also think that we're facing a globally tougher time again because a lot of these Western countries fought COVID with plowing a lot of money into the economy that bankrupted them or put them at a severe risk, but also had inflation ignite everywhere else, and so interest rates everywhere else have had to go up just like here, and it's going to cause a global slowdown if it hasn't already. So it's something to keep an eye on. Appreciate you coming on.
Yes, sir.
Tommy Grisafi, Advanced Trading in Bettendorf, Iowa. We'll bring it back here to Nashville.